Well, hello there. July was a pretty interesting month for Canadian real estate. We saw a drop in interest rates, and also it looks like there might be big problems with Toronto's condo market, which has left many to ask if it's just a matter of time before the same thing happens here in lovely Ottawa. And if you stick around till the end of this video, you'll find out exactly what I think about that. There are no dog days of summer here, folks. This is your certified fresh. No, I think that's a copyright infringement. This is your certified fresh. Oh, that's terrible. This is your August 2024 Ottawa Real Estate Market update. All right, let's get right into it. As always here, we're gonna talk about what we saw in Ottawa real estate over the course of the previous month. That would be July, the month that comes before August. And then in the second half of the video, we'll discuss a news story that has been making the rounds as of late, which I just alluded to in the opener. So now, before we jump into the stats, I just wanna set the stage here by talking about the Bank of Canada's July interest rate announcement. So on July 24th, the Bank of Canada once again cut interest rates by a quarter point, which is a cool sounding way of saying 0.25%. That marks the second rate cut of 2024. The first happened in June and was also a quarter point cut. All right, so in the July announcement and in the days since, there's been what I would call some mixed messaging out of the Bank of Canada. So the positive bit of messaging, especially for people who are thinking of getting a mortgage or for anyone that currently has a variable rate mortgage, is that the Bank of Canada does not appear to be done cutting rates, right? In fact, when the Bank of Canada first cut rates in June of this year, the initial projection by most was that we would see a total of about eight rate cuts, but that those cuts would be spread over a 3-year period. Lately, there's been talk that that 3-year timeline might get accelerated. So again, definitely good news for anyone who has a variable mortgage, and potentially good news for anyone thinking of getting a mortgage at some point in the next 2 to 3 years. Okay. Now, the flip side, the not so positive message from July's rate announcement, and I am paraphrasing here, but the Bank of Canada reiterated that there is this growing disconnect between interest rates and affordability. Basically, the Bank of Canada is saying that so long as we continue to grow our population at a rate that is greater than we are growing our housing supply, interest rate cuts or increases will have very little positive impact on housing affordability. So reading between the lines here, it kind of sounds like they're saying like, hey, housing affordability might not be getting better anytime soon and might actually continue to get worse if we keep doing what we're doing. Again, I think rates coming down is certainly a positive, but it sounds like the mess that has been made of housing over the last 2 years is gonna be a hard one to clean up, all right? One last note about interest rates before we jump into the stats. You're likely going to hear a lot of people, many of them realtors, tell you that now that rates are coming down, we're going to see the real estate market get red hot again. So, like, better jump in now, okay? And here's the thing. Yes, if rates continue to drop in a meaningful way, there is a good chance that we'll eventually hit a point where it stimulates the real estate market in places like Ottawa, especially when it comes to investors. But we're not there yet. Okay, we're not even close. I've mentioned this before, but very quickly, when the Bank of Canada cuts rates, right, the interest rate announcements that everybody makes a big deal about, what they're doing is they are effectively lowering variable mortgage rates only. Okay, fixed mortgage rates are not impacted at all by these cuts. Fixed mortgage rates are based on the bond market. Okay, so right now, even after this latest rate cut, variable rates are still way higher than fixed rates. And so while this cut does provide a little bit of relief to anyone who's currently locked into a variable mortgage, it really does nothing to create a new or more affordable option for someone who's thinking about buying. Right? So in other words, the very large majority of potential buyers out there are still way better off going with a lower fixed rate mortgage. And for that very large majority of buyers, this cut in and of itself does nothing to improve their buying power or lower their holding costs right after a purchase. And so it's very highly unlikely that it's going to motivate them to rush to jump into the real estate market in spite of what some agents out there may tell you. Now that we've covered that little bit of info, let's jump into the July Ottawa sales stats and see what the data tells us, shall we? All right, so we're gonna start with Freehold, as always, homes with no condo fees, you own the home and the land. Let's get those beautiful Freehold stats up on the screen for you in 1, 2, 3. All right, so if we want to summarize the July Freehold stats, it would be that we saw a slowdown pretty much across the board when compared to the last few months. But that's totally normal, all right? In fact, this is exactly what we expect to see in almost every single July of every single year. The start of July usually marks the transition from our spring market, which runs from April-ish, sometimes March, to June. So it marks the transition of that spring market into the summer and fall real estate market. And that summer and fall market still tends to see good activity most years, but it's pretty much always going to be slower than spring, which is usually by far the busiest season for real estate in Ottawa. That all being said, we did sell a total of 1,086 freehold homes in Ottawa in July. That was predictably a drop from June, where we sold 1,251 homes. However, it was the best July sales total we've seen for the past 3 years, right? And if we go back even further, a typical July, pre-COVID, might see us sell anywhere between, call it 1,100 and 1,400 homes in Ottawa. So we're essentially in the lower end of that range here. So all in all, I'd say it's kind of like a normal total. And then the same thing goes for sale prices in July. The average sale price of a freehold home in July was about $732,000. That's a drop of about $17,000, or a little over 2%, from the June average sale price of $749,000. Now again, this is fairly typical, and I certainly wouldn't take it as an indication that homes are suddenly worth less now than they were a month ago. Okay, not at all. A lot of the homes you'll find on the market come July, they're these sort of like leftovers from the spring market, right? And the sellers for those homes, who have now been on the market for a while, usually start to see a real slowdown in showing activity and in sales activity in their neighborhoods at this time of year. That will often motivate those same sellers to transition from this sort of home run pricing model or an aspirational pricing model, which really relies on finding that like perfect buyer, right, for their home, that the person who thinks your home's a 9 or a 9.5 out of 10. So the transition from that to a pricing model that's maybe a little bit more realistic, and that might appeal to those buyers who still think your house is really good, but it's like a 7.5 or an 8 out of 10 for them, right? A little analogy for you to kind of summarize is, this is a little bit like when a clothing store has an end of season sale, right? So like if you wait until the summer to buy house or clothes, you're likely to get a better deal on the stuff that first came out in the spring. But all the most popular styles and sizes are likely to have sold out by then. And even in this slower season, when you have a high quality home, we're going back to real estate here, when you have a high quality home that is priced fairly and in a great area, you're still drawing a good amount of interest. Like a lot of those homes right now in Ottawa, they're still getting multiple offers. In fact, just very recently, I think about a week and a half, 2 weeks ago, we helped buyer clients with a purchase where we literally had to beat out 8 other offers. So there were 9 offers in total on this home. Those offers all came organically within a day or two of the home hitting the market. It wasn't some like preset offer presentation day, right? So still a lot of activity, again, on great product. Did I mention we won that one? Yeah, I think I did, just in case. We won. Beat out 8 other offers. I don't know if I said that. Okay, anyways, moving on. It was more the same for inventory levels in July. Usual reminder here, inventory is a measure that accounts for both supply and demand. And in July, we saw inventory levels go from 2.8 months to 3.2 months. Again, very normal occurrence. And 3.2 months, still relatively low. Some will even tell you that it's an indicator of a seller's market. I'd say it's a fairly healthy number in the current macro environment. Not even sure I'm using that term right, but it sounds smart. Rounding out freehold stats here, homes sold in July took 33 days to sell on average. That's up from 28 days in June. And homes that sold in July on average went for 98.4% of their list price, so still pretty close to the list price. That was down from 98.6% in June. Nothing about either of those figures really jumps out as being interesting. In general, things just kind of went the way you'd expect in July. Now, let's talk about the world of condos, where there are some interesting things happening right now, okay? But before we do that, I want to take a moment for the gag that never gets old, at least to me, and I want to thank this month's Market Update sponsor. That's right, friends. This month's Market Update is brought to you by Crumble Cookies. Crumble Cookies. Get in line for disappointment and maybe diabetes. All right, now that that's out of the way, let's get those condo stats up on the screen, shall we? All right, so the same thing, or the same trends we saw in Freehold also occurred in condos in Ottawa in the month of July. We sold a total of 323 condos in July. It's about 10% fewer than we sold in June, totally expected. But it was also the best July we've had in the last 3 years. And overall, a fairly normal sales total when compared to the last 5 to 10 years or pre-COVID years, right? The average selling price of a condo was pretty much flat with last month. We came in at 439K and change in July compared to 441K-ish in June, so less than 0.5% difference. With the exception of May this year, the average selling price for a condo has landed somewhere between 410K and about 453K every single month for well over 2 years now. Condo inventory also ticked up in July, going from 2.8 months to 3.1 months of total inventory. And finally, the average number of days to sell went from 31 to 33, and the sale price to list price ratio went from 98.4% in June to 98.3% in July. Again, nothing out of the ordinary or unexpected when it comes to condo sales in the month of July. That was quick. All right, so now some of you might be thinking like, hey, didn't this idiot say that there was something interesting going on in condos? Like, because the last section was not very interesting. And they're like, okay, yeah, I like the part where he made fun of crumble cookies and anybody who would wait hours in line for such a mediocre product, but yeah, still kind of boring. And that, my friends, is because we carved out that interesting bit when it comes to condos and made it into our final segment. Look at that segue. So let's get right into it, shall we? And I do think you'll find this interesting. As I've just told you, our condo market in Ottawa, it's like chugging along well enough, right? It's not a red hot market by any means, but things are moving at a rate that is very okay or just fine, right? In Toronto, however, the condo market is seeing some major signs of struggle right now. To give you a bit more perspective on what we're seeing in the six, I don't know if that's still a cool way to say Toronto or not, but anyway. Toronto condo sales volume right now is at a near 30-year low. Right? We are talking levels not seen since the 1990s. Okay? And in a recent report, Benjamin Tal, who is the deputy chief economist at CIBC, so like a real smart guy, he said that the GTA condo market has deteriorated into recessionary territory in that it is currently in a state of economic lockdown. Okay, so in other words, it's not good. Right, it's not good at all. A couple important notes here. Okay, I'm going to tie this back to Ottawa. First, this massive dip in Toronto condo sales has just started to get mainstream press, but I suspect it is going to start getting more and more attention in the weeks and months to come. Nothing sells clicks like doom and gloom real estate, right? And I also suspect that some of those articles or news pieces which tackle this subject, they're gonna frame it as the struggling Ontario condo market or the struggling Canadian condo market. Okay, so keep an eye out for that. Second, there's often this notion in Ottawa real estate that Toronto is this sort of leading indicator for our market, right? In other words, a lot of people think that like whatever trends we see in the Toronto real estate market eventually make their way to Ottawa. And to be fair, there is some truth to that, but it is far from a perfect correlation. There are some key differences between the two markets. They definitely don't always move in lockstep. So the million, right, or billion-dollar question that I think a lot of folks are going to start asking is whether or not Ottawa's condo market is going to follow in Big Brother Toronto's footsteps and also enter into a massive deterioration or economic lockdown. So let's talk about it. In recent updates, I have spoken about some of the shifts that I think we are starting to and will likely continue to see in the Ottawa condo market. Okay? It does feel like in more recent times, condos here have lost some of their broader appeal and they've shifted toward being a bit more of a niche product for folks that are looking for a specific type of lifestyle. right? And so again, I wouldn't say our condo market here is thriving by any means, but that being said, when it comes to forecasting what the next few months or years will look like in either condo market, Toronto or Ottawa, it's super important to consider the following, right? In Toronto, investors make up roughly 70%, that's 70% of the total condo market. That's huge. And let's be honest here, a decent portion of those investors would probably be better labeled as speculators. So a big part of the reason Toronto's condo market has fallen into this sort of deep freeze is the fact that you have a bunch of people who purchased pre-construction condos at record prices during the peak. So those people paid huge early pre-construction premiums when compared to resale, thinking that those units would continue appreciating and ultimately be worth a lot more by the time they were ready to occupy a few years later, right? So in many cases, those Toronto pre-construction buyers, they never intended or even had the means to actually close on their pre-construction condos. The thought was that they would be able to assign, right, or sell their purchase contract at a premium to another buyer at some point in the future when construction was a little closer to completion. Now that's a process known as paper flipping, and it's highly speculative, it's super risky, but for many years, to be honest, it worked pretty well in Toronto's condo market. You could make good profits doing it. But all good things come to an end, right? So then, of course, because of everything that's happened over the last couple of years with affordability, interest rates, construction costs, most, if not all, of those pre-construction units wound up losing value rather than gaining it, right? So on one hand, you have a large number of people who wound up not being able to close on their units, and there's going to be more. That means that a bunch of previously sold units have come back to market, causing a spike in inventory. And then, on the other hand, you have another large group of people who also bought pre-construction, but they were able to close on these pre-construction units, only now they're stuck with a bad investment, right? And so most of those people are trying to sell their units for close to what they paid, which in most cases is a lot more than they're actually worth. And that also causes inventory to spike even further, right? So the end result is this environment in Toronto where you have a flood of overpriced inventory, and those are usually ingredients for a pretty terrible market, right? A buyer's market. Only there are no buyers. So a dead market, right? Now let's contrast that to Ottawa's condo market. Okay, so first off, assignment or paper flipping here is virtually non-existent, and I don't think it's really ever been much of a thing here, at least not for as long as I've been in real estate. The very, very large majority of condo builders here, they just straight up will not allow you to assign your purchase agreement. It's written right into the contract. And even in cases where they do let you, they will typically charge you so much to do it, and they will make the process so incredibly restrictive that it just won't be worth it. Also, in general, our condo market sees nowhere near the type of explosive price growth you'll find in Toronto, making it far less attractive for someone to try paper flipping here, even if it was allowed, right? It's just too risky. So you really don't see much, if any, condo speculation here, right? Anyone doing is probably getting bad advice, to be honest. And to add to that, condos also haven't really made sense for buy and hold investors here for a while now either. Something like 99% or more of the units you could buy today would run well into the red every single month. And again, that's been the case for years now, right? So unlike Toronto, where the large majority of condo buyers have been investors, the majority of condos here, in my experience, they're actually sold to end users. People just want a house, a place to live, right? The other consideration is that because there's been very little investor demand here for a while, and because condos have become a little bit more niche, and hey, also let's face it, because our downtown core has become far less desirable as a place to live in recent years, we're not building anywhere near the same amount of new condos here on a per capita basis as they are in Toronto, right? And that's also been the case for a while now in Ottawa. So the bulk of this Toronto issue is concentrated in new construction condos, right? And I'm going to define that as units that came to market and were sold for the first time in their pre-construction phase between about 2020 and 2022. And when it comes to Ottawa, during that same period, we really just didn't have a whole lot of pre-construction condos happening, right? We definitely had some, and some of those units, which are, now just being completed or are soon to be complete, they are having some challenges. Like, not gonna lie, those particular units are very tough to move right now. But on the whole, we have nowhere near anything close to the level of new condo oversupply that you're seeing in Toronto. Hey, Ottawa's condo market is primarily resale, right? So in other words, it's units that first came to market prior to the pandemic, right? Before 2020. And for the most part, that segment of the market, it's continued to fare pretty well on the whole, right? Prices and inventory are fairly stable. Like I told you, prices haven't moved in 2 years. Sales are still happening, sales volume's normal, right? And so if you live in Ottawa, keep that in mind when at some point over the next few days, weeks, months, you inevitably hear about the sky falling for Toronto's condo market or Ontario's condo market, as again, I'm sure it'll be framed in some places, right? Little brother doesn't always follow in big brother's footsteps. That being said, if you want to follow in the footsteps of my clients who've had great success in all their real estate dealings, the first step is to book a discovery call with me using the contact information below or the Calendly link in this video's description. Really crushing it with the segues this month. And with that, get out of here and enjoy the nice weather, everyone. As always, thanks for watching, and we'll see you next month.